Nothing we say here is investment advice, legal advice, life advice, or representative of the views of the organization we are part of or affiliated with. See chainabstracted.com for more information.
Hey man, how you doing?
Doing
Um,
great. Excited to
yeah,
be here. How you
nice.
doing?
Good, very good. ECC has been kind of a lot, so
Yeah,
kind of trying to get trying to calm down a little bit before the storm hits again. But
100%.
yeah,
It's a
obviously this is Chain
marathon, not a
Abstracted.
sprint.
Yes, this is Chain Abstracted. We keep it quite very conversational, right? Like we obviously set up some questions, but I usually direct it according to what you answer, right? So,
Okay.
but yeah, I'd love to hear a bit more about who you are, what brings you to crypto, and how you joined to, I guess, Electric. Let's start with that. And if you can
Yeah.
give a bit more introduction to Electric as a fund, I know you guys pretty well, and I know a bunch of folks do, but still would love to hear a bit more.
Yeah, absolutely. Thanks for having me. I can jump into, a background about Electric Capital. Electric Capital was founded in 2017 by Vigil and Curtis. They have founded and sold a few startups. They were at Facebook for a long period of time before they themselves inevitably went down the crypto rabbit hole. Since then, they've invested across everything within the crypto space. We'll invest in crypto and fintech, everything within Web3, from the infrastructure side to DeFi to a lot of the consumer side as well. And it's been great, absolute great opportunity to be able to work here at Electric. A little bit about myself. So I got into crypto around 2016, 2017 as well. I was always interested in financial markets and trading. And there was this new market with crypto that was just absolutely exploding. Especially back then, there were ICO this, ICO that. EOS raised a crazy amount of money. And it didn't make sense to me how all these companies were raising a ton of money. I thought it would be a great idea to go out and short these tokens and then go out and become a millionaire because I would be right that, most of these tokens and stuff are never going to launch. Luckily, back then, there wasn't an easy way to short these things. Otherwise, it probably would have blown up before being proven right. But I got around to reading the Bitcoin white paper, the Ethereum colored coins white paper, and back then everything was about white papers. So I just read a lot about this, and it made sense for me to jump into crypto. It's like this new industry where there wasn't a lot of right answers, and that's actually what excited me. There was a world where people were still figuring things out. I could learn significantly more within this ecosystem versus joining the traditional market, whether it be in the tech or finance space. And I could actually have an influence on how this industry is shaped and moves forward and is actually able to enter the rest of the world. So it became quite clear that I was going to, commit to crypto. In 2019, I joined a company called FalconX. They're an institutional prime brokerage. I joined when they're just about 15, 20 people. But it was great to see them scale. I worked on product, trading, and lending. Worked with a number of different customers, miners, hedge funds, venture funds, aggregators. So it was great to be able to learn about crypto market structure. But I wanted to dive a bit deeper into crypto. I wanted to be able to do stuff on chain. I wanted to talk to people building in this space. And I wanted to actually invest, have an opinion, have a thesis that we're investing based on, and actually have skin in the game from there. So a little over 2 years ago, I joined Electric. It's been absolutely fantastic. I spent a lot of my time thinking about DeFi, stablecoins, lending, derivatives, as well as other layer one ecosystems. So obviously Near. I also spent some time looking at Cosmos on the Solana side as well. But yeah, excited to be here.
Okay, this is a spicy question. You
Yeah.
said you said is there was no right answers when you joined, right? Wrong answers.
Yeah, yeah, yeah.
Has that evolved? So is there right and wrong answers in crypto today? What do you think?
That's a really good question. I still think there are a lot of situations where there aren't right answers, but I think it's become increasingly clear when something is the wrong answer, especially given how speculative this industry can be. There's often a disconnect between what should be built versus what the market wants, and sometimes people make shortcuts and end up going for what the market wants, that whether it be in terms of just trying to build stuff for speculation versus actually trying to build products for the long run. And yeah, so I think it's become clear what the mistakes are as people have gone and experimented. And I think that's a good thing. There is still room for experimentation. People should be willing to try new things without necessarily the fear of being wrong. But there's no use in not looking at all the learnings that have occurred over the last 12 years of crypto.
Okay.
Yeah, that's interesting. So, I mean, one of the things you mentioned about investors, I mean, investors have clear opinions, right? Like when you see Kyle Samani on Twitter, he has strong opinions. Avitrol himself has sometimes have strong opinions, and so has everyone, right? I mean, it's an industry where you have to kind of a thesis of thinking and kind of get to a point where you say, well, this company makes sense, this company doesn't make sense. I mean, in terms of Liquid, this still could make sense, right? How do you what do you think about this 100, maybe 1,000 chains, not even 100 chains, I would say, because it's, currently 45 L2s active, 80 to come. It is very clear that there's going to be 1,000 L2s. I think we're getting close to 100 L1s, I'm pretty sure. I mean, if you look at top 100. Is this the right way to go through the space, you think? Or are we just lost in a sense that we're just launching a bunch of chains and thinking that it does something nice for us?
Yeah, that's a good question. I don't think it's one of those situations where it's wrong for there to be a number of different chains, and I think it's one of those things. It's not right or wrong, but I think it's inevitable. I think people want customizability, people want uniqueness. I think community and brand is a big thing that really matters in crypto. That that type of loyalty doesn't necessarily transfer to TradFi companies or Web2 companies. And people also care about autonomy in a way that they also didn't care about in traditional products and ecosystems. So I think those factors are going to continue to lead to significantly more chains. Those were just L2s, but we're still seeing other L1s being launched and those ecosystems being built out. Now there's infrastructure to help launch L3s, and there's probably a middle ground of things that pick and choose. This entire world of modular allows you to pick and choose everything that you do want, and there will always be some combination of these tools that matters more for one person than the other. So I don't think that wave is necessarily going to stop. We're going to continue to see more and more chains. They'll look a bit different, but whatever you want to call it, roll up chain, I think we're going to continue to see an explosion of that. What I'm not a fan of, obviously, is the amount of fragmentation that occurs as a result of this on all aspects. First, in terms of just capital, right? You can have a similar project, whether it be a DEX or lending protocol across 50 different protocols, but each individual protocol, each individual chain has limited access to the capital that's available, either from a trading or lending or whatever DeFi perspective that you want to look at it. The second would be, from a security perspective. And obviously this is incredibly top of mind for you, and EigenLayer and Nuffle with Unified Security Layer, I think will be a great progression forward there. You can't have, 100 validators all individually going for 100 different chains. Ideally, you want to be able to share security in a way that multiplies without having to build out from ground zero. And I think we've seen a couple different attempts of this. I think Cosmos a few years ago was really looking to build out ICS and interchain security and shared security. But I think you need to have the couple of pieces of building the community, actually having traction within a platform, and also being able to capture value in a way that's not rent extractive, but proportional to the value that you're providing. So we talked about financial fragmentation, as well as security fragmentation, but I think also just in terms of mindshare and developers and users, likely there's a marginal difference between maybe this L2 and another L2. How do users who aren't spending 100 hours of their week on Twitter like you and I might be able to actually decide which project should I go out and use, which ecosystem should I go out and develop in. And I think that fragmentation is probably the biggest issue. But I think this is a problem that crypto generally is quite aware of. But I think we're looking towards better solutions to that. Bridges today still aren't great. And I think we'll definitely get into the chain abstraction side of things quite deeply. But improving the UX and making it easier and agnostic to where the underlying transaction is happening or where the underlying protocol has been deployed to. There's still a lot of work that needs to be done there.
Okay. I agree with the fragmentation. I mean, most of the folks would agree. Like everybody saw that in not only from Altus perspective, but also even in events last week, right? Like ECC had tons of different events because there's a bunch of Altus now that they want to do their own thing, and then like suddenly, like you see on Ethereum, not only on the liquidity side,
Fragmentation of the conferences.
which is because it's like because I guess like community is fragmenting, right? Like communities now, like I have this Move L2, I have this like EVM L2, I have this like SVM L2, whatever, and then those have different characteristics, but they're still Ethereum.
And I think every team has like the right to try to establish themselves and like push for their ecosystem. You know, I think there's no reason to not have one versus the other. But yeah.
But how does ecosystem look like in that world, right? Like, can you? I mean, this is like something that came to my mind when we're chatting. It's like, you know, what is it like? What does it mean to win an ecosystem? Like, it used to be like Solana, like, oh, I'm cool. But how do you think about like fragmentation of community? Like, do you guys have any thought about that internally yet, or what's the what's your thinking?
And that's one of those things where for community you don't have to just be a part of a single community, whether you're a user, developer, builder, or like an L1 and like maybe some sort of community manager. You as an individual can be part of multiple different ecosystems and multiple communities per se, but you can't be a part of 100 different communities, and at that point, what are you doing in any of them? So I think there will be competition, and that's where I think like brand marketing and also like your token incentive model actually plays into this as well, right? I think one of the biggest things that help you create a community is obviously like being about like providing value and being loyal to them, making it interesting, but actually producing some sort of wealth effect for them is probably the strongest way you can go out and build a community. And because of that, it doesn't necessarily have to be mutually exclusive. If you can, as a protocol developer, work with other protocols to make your protocol more valuable or they're more protocol valuable, and you can find a way to distribute that value back to your token holders or the users or other developers in a way, I think that will become increasingly important. And that will probably help in terms of fragmentation. But otherwise, I think it'll continue to be, I don't want to say like knife fight. It's not going to be violent, but I think there is going to be significant demand and significant competition for just mindshare across these things, because it doesn't seem like the launch of these new ecosystems are going to slow down, but we'll likely see just more competition in that space.
Okay. Just like, I mean, like hobbies or sports you play. I mean, you kind of play a couple of sports and you kind of part of like, I don't know, a couple of communities in the real world, right? You just don't like being part of one community. It's gonna be the same.
And because we're seeing, online communities, this probably didn't exist apart from like small forums over 20 years ago. And now we're seeing massive communities on Twitter, Reddit, Discord, other platforms, even like Farcaster and ecosystems like that. But at some point, you're not going to continue to participate in every single ecosystem. It definitely helps that these things are online, but it's probably the relationship that you have with that community may not be as strong as the relationship that you might have with like the community of people that you play sports with, or the community of people that you end up working with in some capacity in real life.
Yeah, fair. I mean, so we talked about, I guess, like too many L2s, L1s. What do you guys think about like the investment thesis there? Like, what is the value accrual that you would see? What solutions people should build if people are listening to this, or like where does the value accrue in this world? Like, is it L2s? Is it L1s? Is it bridges? How should one think about this model?
Yeah, that's a tough question. We ask ourselves this question quite frequently, in terms of there are the L1s, there's middleware that connects all the different L1s and L2s, and now you're even seeing L3s. You have different infra providers in between all of that, and you have actual consumer apps. So one, where is the value going to accrue, and where does that value ultimately get distributed across? I don't think that it's going to be the same for every ecosystem. I think there could be some ecosystems where L1s accrue most of the value, some ecosystems where L2s accrue most of the value. Right now, I think there seems to be a significant focus on the consumer side. in trying to onboard, and people believe that as these are the places where people are going to the actual front end or the front actual UX to interact with it, even if there are all these pieces behind. It's likely that these consumer apps are going to get most of the value. But I would kind of take the other side of that, and even though you can probably get mind share and win some part of the market by being the main protocol in front of them, if that protocol is unable to actually function or scale or continue to meet the demands of the user, then I think you're gonna see competitors flock up, and ultimately it will likely be the L1s that seem to accrue the most of the value. I think in DeFi it is a slightly different situation because you have one, speculation, and a lot more clear financial value that is tied to these things in a way that might not be for some of the more just purely tech focused projects or the purely consumer focused projects. I think it's a little bit easier to see how DeFi protocols can capture a bit more value there and redistribute it between either the token holders. I think we're seeing this idea of like protocol owned liquidity and treasuries capturing a lot more value on that front and coming up with creative ways. Do we distribute it to the users on the platform? Do we distribute it to token holders? Do we do buyback and burn? And I think that there's these L1s and L2s can probably learn from DeFi to understand, it's clear maybe to them like what value they're providing, but how does that fit into the broader ecosystem and where can I actually capture that value? And then you have to think about like your users and developers. I don't think there's one of those things. Again, there's no right answer, but you can learn from the mistakes of the past to ensure that you kind of have your moat and you're building defensibility from that perspective.
That's something interesting, which is essentially saying you can build the best app, but then you are, let's say, the old chains, right? I mean, I'm not going to mention any names, but old chains that can't scale. You built it there, eventually you are stuck.
Yeah.
Or it could be that you launched an L2, let's say that's since DeFi, like since AMM, right? We launched it there. And then you suddenly see, well, I'm not going to be able to scale this thing because of XYZ, or there's other apps that are using this platform and they're also using it heavily, so the gas fees are going up, right? Like, what do you think about that? Like,
there's
it's a catch-22.
There's a certain component of, I feel like, lindiness to this. The longer something has been around, the longer they're going to survive, and it goes hand in hand with like the challenging problem of defensibility with crypto. Given that everything is open source, like whatever that you do deploy on chain is readable and visible to anyone that like wants to be able to do to it and like can instantly fork it and add some fancy token on top. So how do you build defensibility? Without defensibility, there's no point of asking about how you can capture value, right? Because it's unlikely that you're going to keep any value that you are producing within this ecosystem. And I think that's where kind of like your token needs to come into play. And instead of just having this massive airdrop or just trying to help or just trying to create some liquidity mining program to get people excited about it, people need to think a little bit more deeply about, why would someone want to even own my token in the first place? Speculation is the answer that comes to mind, but there are multiple reasons why someone would want to own token more than just speculation, right? Even if the value is going to stay stable, am I getting some sort of governance power as a result of that? Do I get to control emissions? Do I get some sort of the fee that this platform is capturing? And having buy-in from that, I think, helps contribute to that. One thing that I would like to see with protocols that are kind of working together is actually doing some sort of token swap if that represents the strength of these partnerships. Because one thing that would make it very hard for a fork to immediately take all of your users and do some sort of vampire attack that we've seen before is if the major users, the major partners, and other major owners in this protocol have bought into your token and have economic incentives that make them care about the long-term value about this token, they're less likely to abandon you to join some sort of fork or other copy of your project. And I think that also ties into how exactly do you think about the incentives that are being structured? Who should be receiving these incentives beyond the ultimate user? Are there other parts of this ecosystem that you need to tie into and reward And another question that maybe some founders don't spend enough time thinking about is how will the market value your token? And this is a very tricky one because once again, there is no right answer, and the answers to this can change overnight, given how quickly crypto narratives can explode and implode. But being able to understand why the market will value your token in some way, and that can help you understand, the right way to think about these things. So it was a long-winded answer. I don't know if that answered your question, but I hope it's valuable.
It makes sense. I mean, tokens are hard in a sense that, you can think really hard about who's going to buy your token, but then you kind of go and say, hey, token is a product, right? I mean, everybody knows this is the case. I mean,
Yeah.
obviously this is a near throat podcast, but like, we know that every protocol has a token. But then the other thing is like, um, like meme coins, and you kind of, if you're as an entrepreneur, you see the meme coins that like there's no any thought that's put into it. It's just a meme,
Yeah.
and then it's actually higher than your protocol that does like all the stuff. So it's like it's kind of hard to see how that works. But again, meme coins alive because, as you said, people gained wealth off of
Correct.
the meme.
And that's like I think meme coins are probably the loudest expression of like community online, right? And I think that's what people are yearning for. Especially, as you saw, I mean, during DeFi summer in 2020, like there were massive communities that were formed around some of these core ecosystems like Curve, Yearn, and many of these projects then. And we during that cycle we saw like these meme coins like Shiba, and now you're seeing like a significant influx with all the meme coins in Solana, and people look to it as if this is like the waste and this is like the problems with crypto. And it's not great that like many of these tokens are scams or rugs in some way, but I don't think that's a reason to actually point to like all meme coins as being bad for the space. If anything, a lot of like the pure tech or the pure infra could try to like learn from how can we take advantage of what we're seeing on the meme side. What if we launched like we did our own meme thing and like participated in some way to help establish our community, while understanding that's like not the main thing that we're trying to build, but like how do you meet the market at what it wants, I think is a good skill that more people need to think about.
But yeah, so another question I usually tend to ask is like, what does chain abstraction mean to you? I mean, there's a different answer to everyone. You guys are investors and kind of deploy capital on chain, off chain. I mean, off chain is a startup, I guess. But like, how do you think about that? What does that mean to you?
Yeah, the ultimate vision I think for chain abstraction is I can use any dApp on any chain from any wallet. I think that's like the simplest expression of chain abstraction to me. And I think the world that we all want to and should want to build towards. I think we're quite far from that world, but I think like near with a lot of the chain abstraction efforts, and you guys in EigenLayer helping on the security side can help improve a lot of these things. We obviously know that bridges in the world and the way that they look like today aren't the best UX or like security answer to help understand and actually participate in this crazy world of 100,000 plus chains. But I think that we're not going to see a slowdown there necessarily. If anything, there's just going to like exponentially increase in the number of venues and the amount of block space that exists within the ecosystem. But we need to figure out a way either from the account side or on the user side to make it easy for every individual to be able to participate everywhere on chain. Without having to ultimately understand all the tech behind the scenes, right? I should be able to go to any website, regardless of where it's hosted, and I am, and I think that should be like a similar thing for crypto.
Yeah, the other thing like people don't realize and maybe don't think about chain abstraction is like, if you think about restaking and AVSs, they're actually chain abstracted products.
Yeah.
In a way that like, because when people say chain abstraction, they think, oh, like bridging with like buying something without bridging or like doing something. How do you guys think about restaking, and like what does it allow that it wasn't possible before? I know like Shuram talks about verifiable cloud, but Just like what is your mental model as an investor, and what are the interesting things that people can build with restaking?
Yeah. That's a good question. Can you say the first part of that question again? Yeah.
Yeah, the question is basically like, I mean, verifiable cloud is kind of like chain abstracted apps, right?
Yeah.
What does like restaking allow, and what are some good examples that you see that people can build on top?
Yeah, so I think like the first part of, why we like restaking, why we like EigenLayer, is just like how much it enables like crypto and specifically Ethereum to scale. Before, you'd only be able to provide security to one ecosystem, but now being able to effectively leverage that, I think is quite awesome. And you can kind of see this middle ground where you have these like kind of parallel ecosystems like Monad and Scale, and then you have like these L2s, and then you have these AVSs, which can have a certain amount of autonomy, but can still depend on ETH for or the ETH security and build off of that ETH security. In terms of the use cases there, that's something I'm still kind of looking into. I think the verifiable cloud stuff think you mentioned is interesting. I think there's a lot of things happening on crypto plus AI. I think we're still quite early with crypto plus AI, but I think being able to actually kind of like verify the entire life cycle, whether it be from like the actual collection of data to the training of the data, and being able to actually access these models, I think will be super interesting. I think AI itself is in a little bit of bubble. Looking at like chat bots seems quite primitive in terms of like what can be the true expression of AGI. We'll likely see, artificial special intelligence. I think more progress being made there, and it's likely too early for crypto to be like majorly influential to that. But I think important things will be built on the near side, on the EigenLayer side. So I think AI plus crypto can be very interesting as well. I think like on-chain agents could be really cool, and actually being able to verify and manage that, whether it be across automated bots or more consumer side applications as well. I think that could be interesting.
Yeah, in a world where you can grab security from Ethereum and Bitcoin, why do you think there's still space to launch new L1s and L2s? This is a tough question, but it just popped up in my head.
Yeah, I mean it when you can rent it, I'm sure there's always a world where like generating security outside of it could be cheaper. It could be cheaper in the short term, but you probably pay in the long term. But I think people have the right and will make that trade-off as a way to go to market. It's the question seems obvious, like Bitcoin, Ethereum, like they have like the best security. Do have the best security of any chain within the broader crypto ecosystem. But one, it could be too expensive for your needs, and two, Bitcoin, Ethereum having been around a lot, it's likely like a crowded market. So if you believe that you want to carve out your own niche, you want to be able to like bootstrap security in a way that doesn't necessarily depend on these ecosystems, and have a lot more autonomy. And I think that's like another cool part about crypto is that you can ultimately choose to participate in one ecosystem or the other. You don't have to be dependent on one. And even though ETH and Bitcoin have proven themselves to be incredibly valuable in that respect, we're still seeing massive levels of innovation across the space. And, there could be a world where there are better solutions. But I think it's a trade-off that the founders, builders, and users will have to make.
Yeah, I'll go a bit deeper into chain abstraction. Obviously, we mentioned about chain abstraction from the near side, but do you guys have a mental model of how this looks like broad, like in a broader image? And then like, what does it enable? Like, what are the apps that we will see that we weren't able to see before?
So I'm like a DeFi nerd, so pretty much most of the things that make a lot of sense to me or are most exciting to me are DeFi applications. I think one thing that's going to be super exciting is this idea of cross margin. Cross margin exists across the TradFi space, and everyone kind of operates within that world where, as a quick definition, even if I have assets on one venue or within one custody provider, I can kind of access the value or leverage the value in that across other ecosystems. And that doesn't seem to that doesn't exist within crypto for a number of reasons. Just looking at the lending world, everything has to be over collateralized and has to be collateralized at that venue. Collateral that I might have on Aave, I can't necessarily use that on GMX or Hyperliquid. If I have an asset that I want to trade against on Ethereum mainnet, I can't use that capital to trade on Solana. So I think being able to do cross margin across chains, I think is going to be huge right now. And that will help address a lot of the financial fragmentation that I was talking about earlier, whether it being able to provide liquidity on like a trading marketplace across multiple venues, multiple chains, being able to lend across multiple chains, being able to borrow across your assets that you have, regardless of the chain of origin from the borrower or the lending side, is something that I'm incredibly excited about. And yeah, I think DeFi is where a lot of my head is at. I think that is probably the biggest thing that I'm excited for, that I think chain abstraction can enable.
In terms of DeFi, what are the primitives you're excited about? I mean, if you're studying most of like Athena came along, or the couple that are like super super exciting, like what are the ones that are like, wow, this is something that's gonna blow up in the next like 3 to 6 months?
Yeah. So I think stablecoins will always continue to be one of the biggest parts of crypto. And we're seeing inflows increase again over the last few months, and especially on the decentralized stable side. It obviously made a big landing this year, and I think their idea of being able to have this native yield currency funded by the basis trade on centralized exchanges is quite interesting. And how they've been able to connect all of that and ensure security across it. But ultimately, it's one example of yield being generated. And I think if you look at more mature protocols on the stablecoin side, like MakerDAO and Frax, you'll ultimately realize that you can't have most of the backing or most of the yield being generated within this ecosystem coming from one opportunity and having that concentration risk. And we'll likely see continuously more deployments across MakerDAO, Frax, or other stablecoins, being creative in terms of how are they managing their collateral to ensure solvency, two, how are they generating yield without taking on too much risk, and then three, how can they ensure their stablecoin gets integrated across the DeFi ecosystem, right? When you look at a stablecoin, it should hold that value. That's like its core definition. But how is it going to be successful if it can't be used as a medium of transfer and a medium of account across the DeFi ecosystem? You should be able to go out and be able to lend against it, provide liquidity, trade against this asset, take advantage of opportunities across the DeFi ecosystem. So stablecoins, I think, will continue to be interesting. Similar to kind of operating in the same space as chain abstraction, I think the world of intents is super fascinating, where you have this off-chain and on-chain component to help match liquidity as a solution to bridges. If individual solvers can help match orders in a way that is much better than the fragmented liquidity that exists on-chain, that is ultimately better for the user. Obviously, there are trade-offs with some components of it being off-chain, and you look at like some major players in the intent space like Uniswap X, where majority of the solvers or the people that are filling these orders come from 2, 3, 4 different firms. So you do see concentration risk and a slight lack of decentralization there. But I think that's just evident of the problems that have been created by a number of these chains, venues, and fragmentation that exists within the liquidity across these things. So I'm super excited about intents to see how they play out. There are a lot of players that are focusing on cross-chain versus cross-asset within the EVM ecosystem, outside the EVM ecosystem, and how that ties into the world of MEV. But that's another thing that we can touch upon later. So yeah, intents I'm super interested in. And a third thing I'm fascinated about is kind of like Bitcoin DeFi and seeing what can be built there. At the beginning of last year, we saw ordinals, and now we're seeing like significant pickup on the Rune side, and people who would originally just hold Bitcoin, not do anything on that side while they're active on Ethereum, Solana, Cosmos, Near, actually moving assets back over to the Bitcoin side and people willing to build in that space. A lot of what we've been seeing seems to be finding more decentralized ways to wrap Bitcoin compared to WBTC, but those assets still exist within the Ethereum DeFi ecosystem or the Near DeFi ecosystem or the Solana DeFi ecosystem. But I'm more excited to see, what sort of DeFi protocols are being built directly on Bitcoin. Are we able to actually launch lending contracts or build like a native like BTC backed stablecoin? What would the maker of Bitcoin look like? So keeping a close eye on that. So those are three areas. Another area that I'm also interested in is like this idea of real world assets. It's kind of a confusing thing to call like real world assets, like as if like none of the stuff that we're doing is necessarily real. And I think that becomes increasingly important to help the strength and stability of DeFi markets. And I think we'll see an interesting dynamic play out with capital and how it moves on chain with RWAs, right? I think we'll probably not see a lot of people talk about RWAs or as much capital flowing into RWAs during bull markets because the native on-chain opportunities for DeFi are likely way more attractive. But then we'll see the exact opposite of that as crypto enters bear markets. But the important part is as they move from crypto native opportunities to on-chain RWA opportunities, the big difference is that capital still stays on-chain. There are large swaths of people around the world that, just because there aren't opportunities to farm or make money or earn yield on-chain doesn't mean they're going to pull their capital off-chain. There are many reasons that they may need to keep that capital on-chain in a way that they can't access traditional financial services, or they're a DAO treasury that's expected to keep their capital on chain. So as the amount of capital on chain increases, we'll likely see less outflows during bear markets as RWAs are like a safe haven for that capital when these opportunities disappear.
Enough what we call them real waffle assets.
Love it.
Just, that's great. Thanks for that. It's a lot of we haven't had anybody that's like got into DeFi as much as you did, so that's quite nice to hear. One like sort of last question before we wrap everything up. One of the things I got to know you guys. I mean, disclaimer: we're electric portfolio company, but it was the sort of the capital, like the developer report that you guys release every end of the year, I think.
We do. I think we just did our half year update, so definitely check that out too.
Yeah, awesome. Yeah, so how does this chain abstracted world impact developers? I mean, have you guys started to see any impacts of that, or like do you think there's going to be a difference in how developers see blockchains in the future?
Yeah, absolutely. I think we're still quite early in this world of chain abstraction. I think for a lot of the newer developers, they're like picking specific ecosystems and that already have significant developer tooling. I think that like that developer experience is probably like a big factor into that, and ecosystems like that have been around for a while that have that developer experience will continue to attract a lot more of those developers. I think we'll be a few years before, or like maybe in this cycle, we'll start seeing developers out of the box take advantage of chain abstraction type software, whether it be on the Ethereum side or using things like EigenLayer or Nearest chain abstraction efforts from the get-go. Right now, it seems to be they're going to go out and build out their core protocol, and they'll look towards adding some sort of chain abstraction. I think the main strategy right now is to just individually deploy different instances of the protocol on different chains based on where the capital is, where the activity is. You saw a lot of protocols that originally launched on Arbitrum, looking to launch on other ecosystems. Some that have been launching on Blast recently that are evaluating how to explore and expand across just the Blast ecosystem. I think that another reason that it will take a while for chain abstraction to really kick off on the developer side is going back to the point of community that we talked about. If you have something that out of the box is like fully chain abstracted, that actually is pretty cool if you're able to pull that off. But that means at some point you are kind of a part of every community, but not like a major part of a single community. And I think that will make you lose out versus a competitor that is willing to commit to a single ecosystem and rally around that, and actually participate, work with other protocols from the ecosystem, work with the L1 or the L2 or the parent chain they're a part of. So I'm really curious to see how that dynamic plays out, that even if the tools are objectively better and allow you to get your protocol in front of more users, more faces, other protocols, if you don't have that good community or identity to help you push forward, then those chain abstraction efforts may not be worthwhile. So I'm curious to see how people will kind of make those decisions, how protocols will make those decisions, and how the market will play out in respect to that.
Yeah, fair. Yeah, so I guess like it's quite interesting in a sense that we're evolving, right? So we're seeing like a bunch of blockchains. So as you said, some people are deploying like single instances, and then they can connect it with like obviously like Nuffle using or like some other solution that you can think of. What's the advice, like if there's an entrepreneur that comes in and watches this, like what's the advice you give people going into the end of 2024 and going into 2025?
I would say like just don't be afraid to jump in, and don't be afraid to ask questions out in the open, whether it be in Twitter, Discord, whatever community that you first come across. People, and like be willing to like jump into the community like head first, and don't be afraid to ask stupid questions. And I think another thing is also to remain open-minded. Things in crypto change so quickly, and some people say it's a good thing, some people say it's a bad thing, but that's just the nature of the ecosystem that we operate in. And I think if you don't stay open-minded, you're likely to like miss out on the continuous waves of innovation. We saw all the strong only BTC people like not be interested in Ethereum or Solana or Near or any of these ecosystems, even though there's like really cool stuff being built out here. And even now you're seeing some of this happen with the Ethereum folks who believe, Ethereum is the end all, the answer to everything that crypto will ever need in the future, and aren't open to like what's happening on the Near side or the Cosmos side or the Solana side. And I think the willingness to be open-minded and consider all options, once again tying back to the point where there is no right answer. It seems like right now like Bitcoin and ETH is the only thing that will ever exist, but obviously that's not true. There is a significant amount of money in a lot of these other ecosystems, a number of developers that want to build in these ecosystems versus Bitcoin and Ethereum. And if anything, we're going to continue to see more of that. So just be willing to jump in, be willing to stay open-minded. Nothing wrong having strong opinions. That helps you guide your way, but don't be afraid to like change your opinion or be open to new things.
Awesome. Well, thanks for being part of the podcast, Sid.
Yeah, of course. Thanks for having me.
We know each other, so that's kind of a bit of a conversational as I wanted to do, which I think kind of worked out well. Thanks for joining, and hope to see you another Electric member pretty soon as well. I'm pretty sure that will happen when we get to like episode 50 or something. This is episode 13. So that's
slowly but steadily.
Yeah. And we had obviously some outages, like the CrowdStrike thing, but it's fine. We're doing okay. But cool. Thanks for being part of it.
Thanks for having me, Alton. Have a great weekend. Peace.